Operator, thank you everyone for joining us today for Jinko Solar's fourth quarter 2023 earnings conference call. The company's results were released earlier today and available on the company's IR website at www.jinkosolar.com, as well as on Newswire services. We have also provided a supplemental presentation for today's earnings call, which can also be found on the IR website. On the call today from Jinko Solar are Mr. Li Xiande, Chairman and CEO of Jinko Solar Holding Company Limited, Mr. Zheng Miao, CMO of Jinko Solar Company Limited, Mr. Pan Li, CFO of Jinko Solar Holding Company Limited, and Mr. Charlie Cao, CFO of Jinko Solar Company Limited. Mr. Li will discuss Jinko Solar's business operations and company highlights, followed by Mr. Miao, who will talk about the sales and marketing, and then Mr. Pan Li, who will go through the financials. We will all be available to answer your questions during the Q&A session that follows. Please note that today's discussion will contain forward-looking statements made under the Safe Harbor provisions of the U.S. Private Securities Litigation Reform Act of 1995. Forward-looking statements involve inherent risks and uncertainties. As such, our future results may be materially different from the views expressed today. Further information regarding this and other risks is included in Jinko Solar's public filings with the Securities and Exchange Commission. Jinko Solar does not assume any obligation to update any forward-looking statements except as required under the applicable law. It's now my pleasure to introduce Mr. Li Xiande, Chairman and CEO of Jinko Solar Holding. Mr. Li will speak in Mandarin, and I will translate his comments into English. Please go ahead, Mr. Li.
很高兴凭借在 N-型 TOPCon 的技术、全球化运营和一体化产能等方面的优势，我们在充满挑战的2023年取得了非常亮眼的运营和财务业绩。感谢金哥团队非常强的执行力，全年组件出货量同比增长 76.4%， 达到了 78.5 吉瓦， 重回行业第一。得益于我们在成本优化方面所做的努力，全年的盈利水平取得了同比大幅提升，全年毛利率为 16%， 相比于2022年的 14.8%， 净利润为 4.856 亿美金， 同比增长 4.56 倍，经调整后利润为 5.736 亿美金， 同比增长 1.93 倍。四季度组件出货量 26.3 个吉瓦， 超出了我们的指引。由于四季度全行业组件价格出现超预期的下跌，我们有接近 50% 的组件销往价格较低的中国市场，四季度毛利率为 12.5%， 环比三季度 19.3% 有明显下滑。
We are pleased to have achieved very impressive operational and financial results in a challenging year by leveraging our advantages in N-type TOPCon technology, globalized operations, and integrated capability. Thanks to strong execution by our team, our module shipment for the full year increased 76.4% year-over-year to 78.5 gigawatts, back to the top position in the industry. Benefiting from our efforts in cost optimization, our profitability for the full year improved significantly year-over-year, with gross margin at 16% compared to 14.8% in 2022. Net income was $485.8 million, up 4.56 times year-over-year. Adjusted net income was $573.8 million, up 1.93 times year-over-year. Module shipments in the fourth quarter was 26.3 gigawatts, exceeding our guidance. As module prices fell more than expected in the fourth quarter, and nearly 50% of our modules were sold to the Chinese market at lower prices. Gross margin for the fourth quarter was 12.5%, a significant decline from 19.3% in the third quarter.
2023年国内光伏新增装机达到了 216.88 吉瓦， 同比增长了 148.1%， 再创历史新高。与此同时，产业链各环节的供需失衡导致了价格下跌，组件中标价格年底较年初下降了超过 40%， 跌破了1元每瓦。 2023年光伏产品的出口量同比大幅增长，但由于价格下跌，出口额同比小幅下跌。今年1月和2月需求淡季叠加，部分厂商的恶性竞争加剧了市场恐慌和价格的非理性。金哥面对低价竞标保持了谨慎和理性。此外，一些不具备成本和产品竞争力的厂商纷纷减产或者停产，我们的开工率能维持在行业领先的水平。3月，随着需求回暖和库存去化，价格逐渐企稳，部分招标价格有所回升，但中期来看，组件价格的下降将显著提升光伏的经济性。预计2024年全球光伏市场需求会持续增长，同比新的技术快速迭代和老旧产能的淘汰也会加速行业的整合。Top 10组件的企业的市占率有望从2023年的70%提升到2024年的90%以上。我们有信心在这一轮周期波动中不断增强竞争力，预计2024年金科的市占率相距将会有进一步的增长。
In China, newly added PV installation reached 216.88 gigawatts in 2023, up 148.1% year-over-year to a historical high. At the same time, excess supply in various links of the industrial chain led to price declines. Tender prices for modules at the year-end decreased over 40% to below RMB 1 per watt. Compared to the beginning of the year, export volumes of PV products in 2023 increased significantly year-over-year, whereas export volume fell slightly as a result of decreasing prices. In January and February 2024, seasonality combined with extreme competition from certain manufacturers intensified market panic and irrational prices. We remained cautious and rational in the face of abnormally low tenders. In addition, while some manufacturers without competitive cost or advanced products reduced or suspended production, we maintained our leading utilization rates in the industry as a result of cost advantage and high order visibility. Into March, as demand picked up and inventory reduced, module prices gradually stabilized and some bidding prices rebounded slightly. In the short to mid-term, we expect the decline in module price will significantly improve the economics of solar energy, and we anticipate demand in the global PV market will continue to increase in 2024. Meanwhile, rapid iteration of new technologies and the elimination of obsolete production capacity will also accelerate the consolidation of the industry. Market share for the top 10 module manufacturers is expected to increase from 70% in 2023 to over 90% in 2024. We are confident to consistently enhance our competitiveness through cyclical fluctuations, and we expect our market share to further increase in 2024.
受益于垂直一体化的制造战略和在 N 型 TOPCon 展期的领先地位，截止4季度末，我们的 N 型产能已经超过70个 吉瓦， 成本结构持续优化。目前 N 型 TOPCon 电池量产效率超过 26%， N 型一体化的成本相比于 P 型基本持平。随着新电池技术和持续导入和降板工艺的优化，我们的成本结构将会变得更有竞争力。
Thanks to our integrated manufacturing strategy and a leading position in N-type TOPCon technology in the early stage, by the end of fourth quarter, our N-type capacity exceeded 70 gigawatts, and our cost structure continues to improve. Currently, our mass-produced N-type cell efficiency exceeds 26%, while the integrated cost of N-type is almost on par with P-type. With the continuous introduction of new cell technologies and optimization of cost-reducing process, our cost structure is expected to become more competitive.
我们高度重视对知识产权的保护，专注于通过广泛的知识产权以保持技术领先。截至4季度末，公司已获得多达330个 N 型 TOPCon 的授权专利， 成为全球持有 TOPCOM 授权专利最多的公司之一。
We attach great importance to intellectual property rights and are fully focused on sustaining our technical leadership based on extensive intellectual property rights. By the end of the fourth quarter, we had been granted 330 TOPCOM patents, one of the largest portfolios of granted TOPCOM patents in the world.
凭借行业最大的超12个吉瓦一体化海外产能和不断完善的供应链追溯体系，我们已经成为美国市场最可靠性最高的组件供应商，预计24年会有明显的盈利释放。创新的生产模式和投入也会随着时间的推移体现回报。山西大基地1期、2期将按照计划于上半年投产，并在下半年逐步爬坡。自动化的全线贯通可以大幅提升人工效率和运行周转效率，预计满产后可以带来较明显的运营成本的下降。
With the largest overseas integrated capacity of over 12 gigawatts in the industry and an effective supply chain traceability system, we have become the most reliable module supplier to the U.S. market, which is expected to generate significant profits in 2024. Furthermore, our investment in innovative production model is expected to generate returns over time. Phase 1 and 2 of our integrated projects in Shanxi will start production in the first half of 2024 as planned, and gradually ramp up in the second half. The full integration of automation can greatly improve labor efficiency and operation turnover efficiency, and is expected to bring a significant reduction in operating costs after reaching full production.
中长期来看 ，AR 和电动车的迅速扩张可能导致全球电力供应紧张，全球对清洁能源发电的需求有望进一步的增长。目前，光伏成本的下降已经大幅提升了光伏在能源行业的竞争力。未来，光伏作为新质生产力，必将在应对能源危机和能源转型中发挥越来越重要的力量。我们看好光伏市场的中长期增长空间，有信心凭借先进的技术和优质高效的产品继续引领行业。
In the mid to long term, the rapid expansion of AI and electrical vehicles may lead to tight power supply in the world, and the demand for clean power generation is expected to further increase. So far, reduced solar cost has significantly increased the competitiveness of solar in the energy sector. In the future, solar as a new quality productive force is set to play an increasingly important role in face of energy crisis and energy transformation. We are bullish about PV market growth in the mid to long term, and we are confident we will continue to lead the industry with advanced technologies and premium high efficiency products.
考虑到供应链和市场情况，2024年的投资强度相对于2023年有明显下降。我们专注于先进 N 型产能的投资，包括山西大基地一体化 N 型产能28个吉瓦和越南 N 型电池和组件产能约4吉瓦。公司将致力提高运营资本效率和实现经营现金流的可持续增长。
Taking into account supply chain and market conditions, we are reducing investments in capacity expansion in 2024. We are focusing on expanding our advanced N-type capacity, including 28 gigawatts of integrated capacity in our Shanxi plant, and about 4 gigawatts of N-type cell and module capacity in Vietnam. We continue to focus on improving working capital efficiency and achieving sustainable growth in operating cash flow.
话题交给接纳之前，我来介绍一下业绩指引。预计2024年底 N 型电池量产效率将达到 26.5%， 单晶硅片高效电池组件的产能分别达到120个吉瓦、110个吉瓦和130个吉瓦，其中 N 型产能占比 90% 以上。2024年第一季度组件出货量在18个吉瓦到20个吉瓦之间，2024年全年组件出货量100个吉瓦到110个吉瓦之间，其中 N 型出货量占比接近 90%。
Before turning over to Jenner, I would like to go over our guidance for the first quarter and the full year of 2024. By the end of 2024, we expect mass-produced N-type cell efficiency to reach 26.5%. We expect our annual production capacity for mono wafers, solar cells, and solar modules to reach 120, 110, and 130 gigawatts respectively by the end of 2024, with N-type capacity accounting for over 90% of total capacity. We expect the module shipments to be in the range of 18 to 20 gigawatts for the first quarter of 2024, and 100 gigawatts to 110 for the full year 2024, with N-type accounting for nearly 90% of total module shipments.
Thank you, Ms. Li. Thank you, Ms. Li. We are pleased to have achieved a historical high in quarterly and annual module shipments, thanks to our excellent global marketing network and the power of our product. Total shipments were 27.9 gigawatt in the fourth quarter, with module shipment accounting for approximately 95%. Annual module shipment increased 76.4% year over year to 78.5 gigawatt. And both module shipments in the fourth quarter and the full year 2024 ranked world number one. We continued to improve product quality and build our customer service network to expand the influence of our brand. By the end of fourth quarter, our accumulated global module shipment exceeded 210 gigawatts, covering more than 190 countries and regions. In terms of a geographic mix, China and Asia Pacific became our major shipment regions in the fourth quarter, accounting for approximately 70%. For the full year 2023, shipment to Asia Pacific and North America grew significantly, more than doubling year over year. As we continue to expand our footprint in overseas markets and build our integrated capacity, we move on to invest in North America and emerging markets. Based on our business conditions and market trends, China and Europe will continue to be the major contributor to the shipment in 2024, with North America, emerging markets, and Asia Pacific expected to flourish. On the product front, the competitive high-efficiency Tiger Neo accounted for 70% of the shipment in the fourth quarter, with average premium of RMB 10 cents per watt versus P-type modules. And the Tiger Neo accounted for approximately 60% of annual global shipment, achieving the goal we set at the beginning of the year, and accelerated its market penetration globally. Currently, the power output of Tiger Neo modules is more than 30 watt peak higher than that of the similar P-type module, providing our customers with higher power generation yield. Shipments of our Tiger Neo were expected to account for over 85% in the first quarter 2024, and its product strength to continue to lead the industry. We are always committed to bring greater economic value to our customer with high efficiency, highly reliable product, and sustainable solutions. Recently, we unveiled the first new green panels produced with renewable energy. These panels were produced in factories that were awarded the Zero Carbon Factory certification by TÜV Rheinland. Jinko Solar is also the first company in the industry to be awarded with Zero Carbon Factory certification by TÜV for silicon ingot manufacturing, wafer cutting, cell manufacturing, and module manufacturing. We also continue to improve our ESG practices and optimize our traceability system. In the first quarter, we were awarded with the ESG Transparency Award from EUPD Research, which recognizes our far-reaching commitment to sustainability and transparency. Recently, bidding for some domestic projects began to activate. EU inventories became depleted, and we have seen additional demand, especially in DG business. With gradually improved PV economics and the growing demand for transmission to clean energy globally, PV demand in the global market is expected to further increase in 2024. but at a relatively slower pace than in 2023. In longer term, the requirement of AI for computing power will further increase the demand for electricity and electrical equipment, ensuring strong growth potential for PV plus storage. As a responsible global company, we are always committed to providing clients with reliable and highly efficient products and solutions, practicing the values we share with our clients, partners, and investors to accelerate to a greener future. With that, I turn the call over to Pat.
Thanks to solid execution of our operation and management strategies, as well as successful efforts in cost optimization, we delivered excellent financial performance. For the full year, key metrics such as total revenues, gross margins, income from operations, and net income all significantly increased year-over-year. We also improved working capital efficiency and optimized operating cash flow. By the end of the fourth quarter, we had cash and cash equivalents of $2.75 billion, and our net debt decreased by over 20% year-over-year. In December, we announced the extension of our existing share repurchase program, and by the end of February this year, we had repurchased nearly 1 million ADS in aggregate amount of approximately $28 million. With our advantages in N-type TOPCon technology, globalized operations, and integrated capacity, we are very confident in our growth prospect and will continue to improve working capital efficiency and achieve sustainable growth in operating cash flow. Let me go into more details now. Total revenue was $4.6 billion, an increase of 3% sequentially and more than 9% year-over-year. Gross margin was 12.5%, compared with 19% in the third quarter and 14% in the fourth quarter of 2022. The decreases were mainly due to the decrease in average selling prices of solar modules. Total operating expenses were $526 million. The increases were mainly attributed to loss of disposal on PPE and expense in relation to settlement of a dispute with customer. Operating margin was 1.1% compared with 2% last year. Excluding the impact from a change in fair value of the notes and long-term investments and share-based compensation expenses, adjusted net income attributed to Jinko Solar Holding Company ordinary shareholders were $65 million, compared with $45 million in the fourth quarter last year, up 73% year-over-year. Now a brief view on our 2023 full-year financial results. Total module shipments were 78.5 gigawatts, up 76% year-over-year, and total revenues up 43% year-over-year. For the full year 2023, gross profit was about $2.7 billion, an increase of 55% year-over-year. Gross margin was 16% compared to 14.8%. The increase was mainly attributed to the decrease in the material cost of solar modules. Total operating expenses were $1.8 billion, up 9% year-over-year. The increase was mainly due to an increase in impairment loss on PPE, an expense in relation to settlement of dispute with customer, and an increase in staff cost. Operating margin for the full year of 2023 was 5% compared to 0.5% last year. Excluding the impact from a change in fair value of notes, long-term investments, and share-based compensation expenses, adjusted net income attributed to Jinko Solar Holdings ordinary shareholders was about 574 million, up nearly 2 times year-over-year. Let's move into the balance sheet. As mentioned, at the end of the fourth quarter, our cash and cash equivalents were significantly higher at 2.75 billion, up from 1.93 billion at the end of the third quarter and 1.64 billion at the end of the fourth quarter of 2022. AR turnover days were down to 76 days in the fourth quarter from 87 days in the third quarter. Inventory turnover days were down to 57 days from 67 days in the third quarter. The total debt was 4.38 billion at year end compared to 4 billion last year. And net debt was 1.6 billion compared to 2.3 billion last year. This concludes our prepared remarks. We are now happy to take your questions. Operator, please proceed.
Thank you. If you wish to ask a question, please press star one on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star two. If you're on a speakerphone, please pick up the handset to ask your question. Your first question comes from Philip Shen with Roth MKM. Please go ahead.
Hi, everyone. Thank you for taking my questions. First one is on pricing. Was wondering if you could share with us the Q4 ASP. Sorry if I missed it. And then what do you expect that ASP to be in Q1 and Q2 and as we get through the year? Thanks.
Hey, Jenner, would you like to answer the question? Hey, Philip, can you hear me? This is Charles speaking. Yeah. Okay, Jenner,
yes, I can hear you.
Okay.
Hey, Charles.
Hey, so I'm traveling, so I didn't get all of your question, but I heard it's about pricing, right? So is it the pricing, actually the pricing significant drop happens across December to January. So that means if we compare the ASP between Q4 and Q1, definitely there will be a big gap because of the market price changes. The detail number-wise, I don't have that with me, right? Sorry for that.
Okay. Yeah. Hey, Jenner, thanks for that. So can you share what the ASP was in Q4 for modules? And then can you quantify how much lower Q1 might be? Thanks.
Charlie, can you take that? I don't have the number with me now.
Yeah. Philip, I think the most important thing is we believe it's kind of the panic sales, the module, recent, let's say 2 quarters. And we don't believe the price, particularly in China, is sustainable. And we are expecting, and as well as the market, expecting the module price has been stabilized and maybe up a little bit, And back to the pricing, it's depending on different markets. The U.S. is pretty, significantly a price premium, and Europe is a little bit better, than China, and different segments. DG versus utility has different, price difference. But to answer your questions, I think you want to explore is for sure, if Q1, Q2 versus Q4 last year, we think the ASP, is still in the downward trend, but it's not dramatically, but slightly, and we think it's reaching to the bottom, in the first half year of 2024 for the ASP,
Okay. So, but you have the average selling price for all the regions for Q4, right? Can you share that price for Q4?
No, we don't disclose, but you can calculate the blended, if you take the total revenue
Okay.
versus module shipments. And typically we have, I think 95% of the revenue is coming from module business.
Okay, thank you. So it sounds like the bottom could be Q1 or Q2, or do you think the bottom is more Q2 or more Q1 in terms of module pricing?
I think different company has different mix, but I think it's relatively stable Q2 versus Q1. Maybe a little bit lower, but it's not significant. And that's what we are looking at. And the most important thing is we think that China, the demand is exceeding the expectations. China demand is very, very good. And Europe, the destock has been completed, and they're picking up, the stock. So we think there's a kind of the improved, outlook, from the demand side. But still some oversupply situations. But for Jinko, we have more, 90% is N-type and global sales and manufacturing capabilities. And we think we are relatively better, and than the other peers. And but it takes time, for the low efficiency capacity, tier 2, tier 3 companies phase out. But it takes time. But we think the most important thing, we focus on our competitiveness, and throughout the a relatively challenging year. Yeah.
Yeah. Okay. Thanks, Charlie. Shifting over to margins. So you've given us a little bit of a framework for how to think about pricing trends through the year. How do you expect, what do you expect your margins to be for Q1? I know you haven't given official guidance, but, just relative to Q4, maybe you can say a little bit up or down or something. And then as it relates to Q2, do you see, when do you see a bit of a recovery of the margins? Thanks.
Yeah, it's, we estimate, the Q1, Q2, first half of the year, it's a little bit lower, slightly lower versus Q4 last year. It's not dramatic lower for the Q4 versus Q3 last year. It's slightly lower, throughout the Q1, Q2. But we believe there's opportunities, and for the second half of the year, maybe profitability will to expand.
Got it. That's very helpful. And then finally, I think in your slides, you talked about 2 gigawatts of integrated U.S. capacity. Again, sorry if I missed this, but does that mean you might do wafer, cell, and module in the U.S.? And can you share, if so, what the locations are? And then, sorry, I'll leave it there and I have one follow-up on that topic. Thanks.
Yeah, the U.S. capacity, we started the constructions last year, and it's getting ready. I think very quickly in March or April to start the operation. It's 100% module, 2 gigawatts, no wafer cell. And but we have integrated capacity in South East, the Vietnam, Malaysia. The capacity is roughly 12 to 14 gigawatts. And in the combinations, with the 2 gigawatts, the module capacity in the U.S., I think we are in a good position. And on top of that, we have separate, independent supply chain from the poly, everything, to the module. And we have very good, traceability systems and the proof record, right, in the last year. So we think, this year is, we have more market opportunities and to catch up, for the next 2 or 3 years, for the U.S. market.
Got it. Okay, so it's only 2 gigawatts of module, or it is 2 gigawatts of module. The way it was written on the slide 6, it sounded like 2 gigawatts of integrated capacity could be in the U.S. But my follow-up here, and then I'll wind it down, is what is, and this might be a bit of a tough question, but what is your view of the discussion around the foreign entity of concern language, which a lot of people are talking about could be added to the 45X manufacturing PTC, which might make it more difficult for you guys to add or to receive the PTC. You're ramping up your facility basically now, if not maybe in a month in April. To what degree does that concern you? Are you following that topic at all? Thank you.
Frankly speaking, I'm not familiar with the topics you are talking about. The foreign entities, the regulations updates, but we will follow up, after the call. But I think I'm not sure you are talking about, like the semiconductor, the sensitive, technology. But we think solar is more, pervasive and very common, for for each countries to develop, and it's not data sensitive. But anyway, we will follow up, the topic you are talking about. But I'm not familiar with the progress.
Okay. Thank you, Charlie. I know I asked a lot of questions. Appreciate it. We'll pass it on.
Thank you. Your next question comes from Alan Law with Jefferies. Please go ahead.
Thank you for taking my questions. So would like to know, because there's a very detailed capacity expansion plan, and just would like to ask a bit on the details. So by the end of 2024, it would be 120, and then 110 and 130 gigawatt for wafer cell and module. So my question is mainly on the cell, because the company has 70 gigawatt of TOPCon by the end of 2023, and then supposedly the remaining 20 gigawatt is PERC. So, and then by the end of this year, it's 110. So will it be 100 gigawatt of TOPCon plus 10 gigawatt of PERC? If that is the case, then do you mean you would impair the 10 gigawatt of PERC this year?
The answer is we will phase out 20 gigawatts, the PERC capacity throughout the year. That's the plan. And we have everything we have discussed by the end of the year, the capacity is 100% N-type. It's not no P-type capacity. The cell capacity is 110, and the major part is the 28 gigawatts, the Shanxi, Shouper factories, plus what we are talking about, the Vietnam, 4 gigawatts, as well as we have some improvement of production, the volume, existing capacity. So total is 110, for the N-type top capacity. We did have 28 gigawatts per capacity, and we don't have plan to upgrade, and we think it's not economic, makes sense. And the most important thing is we have depreciated, the capacity over 5 years. So we don't believe, we have significant burden, for the 20 gigawatts, the PERC. And we focus on the technology, the new technology and new products. That is, I think that is the smart decision.
I see. So just to confirm, you basically for the 20 gigawatt of PERC, they are fully depreciated. So basically they were built in 2019, and then by now they are fully depreciated. So you do not see major impairment risk this year, right?
Yes, roughly, yes. And we did have some kind of residual value, but it's not significant. Most of the assets has been depreciated.
Yes, that's very impressive because a lot of peers in this industry might have a lot of impairment this year. So my next question is, what is the new signed ASP for the contracts that you are signing in the U.S. market? Because I have been hearing different feedback saying that prices for utility projects in the U.S. are declining from 30 cents to below 30 cents since 4Q. So I'd like to learn your view on this front.
Yeah, there's a kind of, I think, public index, and for the U.S., the price range is relatively, I think, relatively big, high 20, low 30, what kind of in our range. And it looks like it's in the downward trend, but relatively stable. And, the different customers, different, the preference. And we think we are in a good position, and because we traceabilities and we have separate, poly and through the modules, and we think we can sell relatively, the price premium with our peers.
Thanks. So you've mentioned overseas polysilicon. So we'd like to have an update on the overseas polysilicon price. Is it rebounding or it's still trending down?
I think in the recent, 3 months, it's relatively stable because, the polysilicon, the out of China is around 100,000 metric tons. It's no new capacity are expected in the next 1.5 years. But the other things is maybe some China poly, through the, but I think there's a, relatively risk, and there's a very complicated compliance, and so we don't see significant downward and relatively stable,
I see. So, switching gear to the European market, because you have mentioned this stocking has basically completed. So, would like to follow up on this. Like, are you receiving orders in normalized manner? Like, what are the how about is it from the residential market or it's mainly from the utilities market in Europe?
I think both, but in the recent quarter, I think the majority is the DG and the market, but we see this year both, utility and the DG will, grow year over year.
So you don't see inventory as an issue even in the DG market anymore? Because last year it was a huge issue.
Yeah, and last year, the first half year is built the stock, right, for the DG distributors, and this stock, through I think 5 or 6 months, and it looks like, on top of that, even not only in the European market as well as other markets, the customers, they are waiting to the bottom of the module price, but it looks like, stabilized. I think, the price is not sustainable. A lot of customers accelerate, the purchase decisions, as well as the destock, the stock level is going back to normalized level in Europe, and plus the logistic issue, right? Red Sea, issues. So we see, the rebound, from the European market, and the second quarter, pretty sure is a strong quarter for the European market.
Sure. And in your PowerPoint, I think it's the first time that you have officially put ESS into the whole press release. So we'd like to know, do you have any quantitative shipment target on ESS? Because I know you have capacity for more than 10 GWh. So we'd like to know on that front.
Storage, and we build up the capabilities, the team's products, capacities, and the majority from last year. And the key focus is we we develop our R&D capabilities and products and focus on some key markets. And so far it's in the relatively early stage, but we are confident, and we will disclose maybe the full year, the guidance, and later this year, maybe in the second quarter, third quarter. But this year we think it's a good opportunity to catch up the markets and build a strong foundation for the next few years. So that's the key focus, not the focus for the shipment of this year.
Thanks. Thanks a lot for the comprehensive information. So I'll pass on. Thank you.
Thank you.
Thank you. Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. Your next question comes from William Grippin with UBS. Please go ahead.
Excellent. Thank you very much. My first question was just on your 300 plus patent portfolio. I was wondering if you could provide a little more color on where those patents are granted. Are any of them international? And one of your peers is out there asserting their IP rights related to some TOPCon technologies. Just maybe how are you thinking about that? How do you view that relative to your patent portfolio? Thank you.
The patents and that we put a lot of R&D efforts in the recent couple of years, and we developed and disclosed over 300 TOPCon patents which we developed by ourselves. On top of that, we have additional more TOPCon patents by acquisition from others, and the patent is our key differentiators and the key strategies, and we licensed to one of the top 10 module company and one of the top 5 solar cell companies. And it's an illustration how we strong and capable our R&D teams on the cutting edge technology.
Okay, yeah, appreciate that. And then just on the 26% mass production N-type cell efficiency that you referenced in the press release, how do you expect that to translate into mass production module efficiency, and when do you think that would ultimately be realized in mass production? Thank you.
26% cell capacity, we have reached to that level, the mass productions, and our target is end of this year, 26.5%.
All right. Appreciate the time. Thank you.
Sorry.
Yep.
Yeah, sorry. And I think, that's for the standard, the 182, I think, we are targeting roughly 610 to maybe 620 watt, for the standard 182 modules, yeah.
Thank you. Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. Your next question comes from Rajiv Chaudhry with Intrinsic Edge. Please go ahead.
Yes, good morning. I have a few questions. First of all, just in terms of housekeeping, can you tell us what the depreciation number was in the fourth quarter and what you expect it to be in 2024?
So sorry, could you repeat again?
Yes. The question was about depreciation in the fourth quarter and what the expectation is for 2024.
Oh, depreciations. It's roughly, I think, 6 billion to 7 billion RMB, for 2024. So each quarter roughly 1.5 1.5 to, I think, 1.8 billion.
Sorry, can you repeat that? 1.5 to 1.8 billion RMB?
RMB, yes, depreciations.
Yeah. And that's in 2024. What about the fourth quarter?
Last year, right?
Yes, 23. Yes, sorry.
Yeah, similar amount. It's not significant different.
So around 1.5 billion in the fourth quarter?
Yeah, roughly.
Okay. And then what was the total CapEx, capital spending in 2023, and what is the expectation for 24?
For CapEx, yeah. Let me go into some details. And for the 2023, our total CapEx is around RMB 18 billion, and we expect a range in 2024 is from 11 to 15 billion, depends on the market.
I see. Okay. And out of this 11 to 15 billion, is it almost 100% related to the module business, or is there anything related to the storage business as well?
It's related to our integrated solar manufacturing.
Okay. The next question is about the charges that you had in the operating expenses. You mentioned that the write-down of assets as well as the settlement with the customer, if they had not happened, then the total operating expense would have been the same as the third quarter. So by my calculation, that is about 60 billion RMB, or about $85 million. Is that, 0.6 billion RMB, or about $85 million. Is that the correct number?
Rajiv, you're right. We did have some kind of special one-time items, in the fourth quarter last year. One is, I think, some kind of customer dispute. It's around, the $30 million, which is we have some impairment, impairment for the equipment around $10 million. So we did have $40 million. I think one-off items you can excuse.
I see.
It's not recurring items. Yeah.
Okay. And comparing your cost structure to the tier 2 manufacturers, can you give us an idea? My calculation is that your cost structure in the fourth quarter was about 10 percentage points better than the tier 2 and tier 3 manufacturers. So, for example, if you did 12.5% gross margin, the tier 2 and tier 3 were operating at 2 to 3% gross margin. Can you comment on that?
We are confident that our cost structure is leading, and we have advantage. But we don't comment on detailed numbers, and different company has different situations. But you're right. But if we are, let's say, making low profit levels, I think a lot of companies, doing a similar business, will lose the money. That is, we're very confident. And but again, I think it takes time, to phase out the tier 2, tier 3 companies, and it's after the consolidation and the phase out, and we think we can get more market share and make decent profitabilities. But it takes time.
Do you think at this point your cost structure is better than other tier 1 manufacturers?
I don't, do 100% guarantee, but we are confident,
So you're confident that your cost structure is already equal to or better than other tier one manufacturers?
Yeah, we are confident that, our cost structure, capacity, technology is leading. Yeah.
Can you elaborate on the expected cost improvements that are likely to happen as a result of the integrated production that you're going to roll out next year of the Shaanxi plant? How much of a cost advantage are you going to create as a result of the integration and everything happening in one location?
Yeah, that it's not purely cost advantage. It's the Shaanxi, sugar factories. It's digitalized and automatic, and the ESG traceability is low carbon, everything, and we integrated a lot of advanced equipment and streamlined a lot of the even phase out some production stage, and have significant workforce efficiency and very high turnover ratios and very good position locations to serve the customers in the West China as well as the global market customers. So the cost structure is, it's reflecting the advantage, and it's a big amount, we believe, but we don't disclose. But we think it's a big advantage, with this existing production structures for the industry.
And finally, I want to confirm a number that I think Jenner gave. The total volume of shipments of N-type in the fourth quarter was it 70% of total shipments?
That's 70%, yes. 70%.
And did he say that in the first quarter it will be 85%?
The full year, let's say it's full year, it's around 90%. So gradually from 70% to 95% quarter by quarter, and this year. So Q1 this year, I think roughly 80%.
Okay. So in terms, going back to the gross margin, so you are suggesting that the first quarter gross margin should be slightly lower than the fourth quarter. So are we still looking at a number around 12%?
You mean the absolute number?
Yeah, the actual gross margin.
Yeah, we don't disclose that, but I said, it's just very slightly, downwards, but not dramatically. But we think it's a bottom, and it's reaching the bottom, for the first half year.
So if the gross margin is around 12% in the first quarter, and the prices stabilize from March, April onwards, is it reasonable to think that gross margin could improve in the second quarter because your costs will keep on coming down, and also your shipments to the U.S., which are higher ASP, will go up?
We think, we have more likelihood to improve in the second half year. The input outlook, the demand outlook, and you are talking about U.S. shipments. It's the second half year loaded, and I think roughly maybe, let's say, 60%, 65% shipments in the U.S. in the second half year, as well as the Shaanxi sugar factories is doing the pilot productions, the first half year, but will be 100% operational by the end of the third quarter. So everything, together, we think it's the margin, the expansion is likely to, in the second half year.
And what do you think the impact of, you mentioned that by the fourth quarter, you expect that tier 1 companies or top 10 manufacturers will have as much as 90% of the market. That basically means tier 3 will have shut down and tier 2 will be selling much lower output than they are selling right now. What do you think that does to pricing by the fourth quarter?
It's the fourth quarter this year, right?
Yes.
Yeah. It's difficult to estimate, but I think there should be stabilized. And on top, the most important things, I think by the end of the fourth quarter, I believe a lot of industry players for tier 2, tier 3, and as well as the companies, they never in the solar industry but entered, in the recent 1 or 2 years. Those guys are going to, the capacity will be phased out 100%. So that's my estimation. Yeah.
Okay, great. Thank you very much, and good luck in 2024.
Thank you. There are no further questions at this time, and that does conclude our conference for today. Thank you for participating. You may now disconnect.